Welcome in, folks. I want to speak about some stocks that I want to buy that are absolutely crashing here recently. So I want to react to some moves in the market here, kind of talk about some stocks that I really look at as phenomenal opportunities in this market that I'm like, I've got to start positions in these stocks, okay? Then I want to go ahead and react to two videos specifically from today, okay? This one with the CrowdStrike CEO, he went on CNBC just actually not that long ago, a few hours ago. And if you didn't know, there's a massive global outage going on in regards to CrowdStrike. It created a whole mess here today. Some of you guys watching this, you might have been affected in some way in regards to this. So I want to react to that, and then I want to react to Dan Ives speaking about this as well as some other matters. So yeah, it's a pretty interesting situation. I saw it before I went to bed last night, and I'm like, ooh, that's going to be a problem for tomorrow. That's going to be a problem. So appreciate y'all joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. New all-time high subscribers in the history of this channel. I appreciate each and every one of you, okay? So starting out here, Ulta Beauty actually is looking pretty interesting. This stock has been hammered recently. I mean, we go back literally just to February. The stock's 550. It's down to 391. Ulta actually looks very interesting. Obviously, Ulta's one of the best run retailers in the world, right? They focus really on beauty, cosmetics related items. And looking at this stock, forward P on a 15, 2-year out forward P is around a 13 on the stock, roughly, right? If we look at current year expected earnings per share growth, obviously this is not a winner chicken dinner year for Ulta, right? We all know that. But then next year expected to get up to about 16% EPS growth. And then as far as revenue, not much is supposed to happen this year, but then back to double-digit growth next year is expected. Good gross margins considering they're a retailer. And net margins are pretty impressive in regards to Ulta also considering they're a retailer. I mean, you know, net margins, keep in mind this net margin number here, okay? If we want to compare them to, let's compare them to a couple other retailers to kind of see where their net margin is versus some other retailers. So let's compare them against, you know, let's compare them against two big dogs. Let's compare them against Walmart. Let's compare them against Target, right? And let's see where net margins are at here. So if you look at Ulta, it's about 11%, and you look at Walmart's about 3% net margins, and then Target's about 3.8%, so a little higher than Walmart. Let's compare them to, what about a Best Buy? What is Best Buy's ticker? BBY, is it? Yeah, BBY. Let's see where Best Buy's at. Best Buy, 2.7%. Brutal. Who else should we compare them to as far as a retailer goes? I mean, gosh, I don't even know who the heck else to compare them to, just to be quite frank. But you can see, obviously, their margins are very impressive. That net margin for Ulta is incredibly impressive. I mean, absolutely. I mean, we can compare them to somebody like a Dollar General, which I don't think is a good comp, but let's see Dollar General, 3.6%. I mean, you know, Family Dollar, are they still I think they got bought out some years ago. Yeah, I think Family Dollar got bought out by one of those, right? So, yeah, Dollar Tree, did they get bought out as well? Let's see Dollar Tree if they got bought out. Whoops. Oh, Dollar General, there we go. Dollar Gen. Oh, wait, did I just look at Dollar General? I think I need to look at Dollar Tree here. Dollar Tree, there it was. Dollar Tree, compare them to them, 3.9%. Costco, what about Costco? That's another retailer, very successful, right? Costco, net margin, look at that, 2.8. I mean, so Ulta, you know, you look at a stock like Ulta, and it's a best-of-breed retailer. The gross margins are incredible. The net margins are incredible from that company. You know, let's even compare them against like a Nordstrom. Well, Nordstrom's obviously high-end, right? Compare them against a Nordstrom. Well, net margins are negative recently, but I think usually, you know, Nordstrom has, you know, very slightly positive net margins. I mean, it's incredible. What about Macy's? Is that ticker symbol M? Is it for Macy's? Yeah, ticker symbol M. Compare them to Macy's, 1.24%. Ulta's like best of breed. I mean, that's incredible net margins. Like they're destroying everybody else. So Ulta's a stock I look at, actually pretty interesting here, under 400. Lululemon, whew, what a vicious crash for Lulu, right? This stock was $500 plus going into this year, right? $500 plus going into this year. Now it's sitting at 280. An absolutely incredible just crash this year the stock has had. Pull up a year to date. Oh, 44% down this year. Brutal. the capital with a capital B, right? Obviously, the stock's done very well over the past 5 years. We go back 5 years ago, 189. That's not actually that impressive. That's incredible. Considering all the success Lulu had, and I would say in the last 5 years, Lulu went from a more niche brand to like a big brand, right? A famous brand. And man, that stock's in a tough place at this point in time. But the thing I'll say about Lulu that I like here is Lulu does have a pretty attractive valuation as long as their business model is not broken. And that's what I'm really trying to figure out in regards to Lulu, or do they actually have a break in their business model? 20 forward P on the stock, roughly in line with the market. 2-year out forward P, 17. Current year numbers are expected to be pretty bad here, but they are expected to get better in the future. And good gross margins, good net margins. If we compare them against Nike, which I absolutely love, obviously, right? Let's compare Lulu versus Nike here and see where these two are at margin-wise against each other. So Lulu's beating Nike as far as gross margins go, and Lulu's beating Nike as far as net margins go, right? Which shows you how, well-run Lulu's been over the past few years. But with that being said, they might be potentially taking some missteps. They've broadened out their product offering in quite a substantial way. They've also gone down tiers as far as customers go a little bit recently. And they're also trying to make that catapult to become a massive brand like a Nike. And those are tough things to do. So things to consider there, but Lulu's is looking actually pretty attractive, which I never thought I would say that. If we look at Sam's, so Sam's stock, oh my gosh, you want to see a crazy one? Look at this. So fascinating. Sam, by the way, they own Sam Adams, Oktoberfest. They own a ton of different popular beers. They own Truly. Look at this one. It made this run. If you go back to kind of that Rona lows, stock was 300 or so, and it climbed all the way to almost $1,300. Look at this. Look at this. Almost $1,300 a share. And just absolutely has crashed. Now you may say, how did the stock go up that much and then crash this bad? Well, what happened was, from my understanding, Truly took off like crazy, and like the whole seltzer kind of beer space was like booming. And then everybody thought that was going to be lasting, and it was more of a phase and a fad. And it seemed like then that kind of fell out of favor. And ever since then, Boston Beer Company has been absolutely a devastated stock. Now, I was looking at this one in the private group here today. We were taking a peek at this one. And the interesting thing with Sam is it doesn't look that cheap. A 29 forward P, 22, 2-year out forward P doesn't look that cheap. So another thing I'm trying to figure out is, are the younger generations really drinking beer like the previous generations? Because that's something I have a concern with. Does Gen Z drink beer? Like, I think that's a fair question. Does Gen Z drink beer? Is that something they're interested in, right? And additionally, what about the millennial generation? I feel like, and maybe it's just the millennials I kind of know, I feel like a lot of millennials don't really drink beer very often. Like, maybe every once in a while, if they go to a restaurant and it's like the type of atmosphere that you would drink a beer if you go to a sporting event or something. But for the most part, I don't. At least, once again, maybe it's just the people I'm around, but I don't see anybody that's like drinking like previous generations did, where it's like they come home from work and they, slam 3, 4, 5, 6 beers, right? So I don't know. Like that's a fair question. That's something I got to find out. But Sam's interesting. I'll say that. It's a very well-run company, right? EA is actually interesting. This stock hasn't really crashed, but if you really look at this over the past few years, the stock hasn't gone anywhere, man. I mean, absolutely anywhere. You could back this stock up all the way to, what are we at here? Basically about 4 years ago. The stock's gone down 2% in the past 4 years, right? That's interesting. Now, the thing with EA is they got a massive success on their hands that's going on right now. They just launched the EA game, the college football game. Huge win for EA overall. It's going to be a huge new boost for their business model. But yeah, that stock, it's crazy to think that stock's down 2%. Considering how successful this new game is going to be, this is the biggest thing to happen, I think, in gaming this year for any type of game. This is the biggest thing to happen this year for any type of game. This college football game. It is so big, it's ridiculous. But forward P on this one, 19, 2-year out forward P 16. Actually looks relatively attractive. I did hear they could be having some issues as far as dealing with potentially athletes that don't want to sign off their likeness. I heard something about Marvin Harrison Jr. might not be doing that, so that could affect the Madden game. So I don't know, we'll see. I also remember Bill Belichick back in the day. If I recall, Bill Belichick was never in the Madden games back in the day. He found a way out of that. So I don't know. Whirlpool's actually interesting here. Whirlpool reports earnings this coming week. That one sets up, I will say, very well into these earnings. I mean, look at the 5-year on this one. It's down 28%. I mean, look at where the stock was back May 2021, 250 plus, and now it's $106. They make fridges, obviously washers, dryers, ovens, microwaves, all those sorts of things, right? Other appliances around the kitchen. They own KitchenAid as well, with obviously the popular mixer business. But Whirlpool actually is an interesting setup, I guess, into these earnings. And the reason being is there's a potential buyout that could be coming for Whirlpool. So that kind of gives like a good kind of feeling around the stock, right? About like, there might be a buyout coming. Nothing's been confirmed there, but it's a potential, right? And then what if Whirlpool says, our business is kind of bottom now, we expect it to start to slowly uptrend? I think that could be huge for that stock as well, because it's still in such a devastated place. So Whirlpool actually sets up interesting into this earnings. Estee Lauder, I mean, gosh, I've got to start a position. I got to, man. It broke 100. And I told you guys, if it breaks 100, I'm going to have to start a position in this one. I gotta do it. This is crazy. I mean, this stock was 370 back December 2021. I mean, even in the Rona crash, right? The stock got down to, what did it get down to in the Rona crash? 150. And here today, it's 98. Unbelievable move down for Estee. It's in complete free fall. I'm going to have to start a position in this one. It's too good they own too many great brands for me not to make a move on this one. And I understand there's been a huge move away from high-end cosmetics like Estee Lauder, and it's been all into e.l.f., right? e.l.f.'s just taken ridiculous amounts of market share, and obviously I've, been a huge beneficiary of that. Look at the 5-year performance between these two. Estee Lauder's lost almost half of its value in the past 5 years, and e.l.f.'s gained 900% plus in the past 5 years. So I've been a direct beneficiary of that play out, but I like Estee Lauder. I like the brands there. I like their long-term potential, and I think I'm going to have to start a position sooner rather than later. I think I'm going to have to do it. As far as next one up here, and by the way, Estee, their business is not in a good place right now. I think a lot of us know that, right? If we look at EL, not in a good place, right? Look at the trailing 12-month earnings per share growth. It's not really growth, right? Look at the trailing 12-month revenue. I mean, -3%. It's been rough. But I do believe there's a brighter future for Estee. Now, we compare them versus e.l.f. here, and we can see e.l.f. has been putting up way, way better numbers than Estee Lauder, right? Trailing 12-month earnings per share growth for e.l.f. is 100% versus -41% for Estee Lauder. Trailing 12-month revenue growth for e.l.f. is around 77%, which is ridiculous, by the way. I mean, look at NVIDIA is one of the few companies that's actually outgrowing e.l.f., right? Estee Lauder is at -3%. So e.l.f.'s been eating Estee Lauder's lunch, along with they've been eating everybody's lunch, to be honest. But I will say EL, I like the brand long-term. I like the company long-term, and it looks attractive, under 100 especially. So yeah, I might have to make a move. By the way, this is 1000xstocks.com. If you want to apply for access to 1000xstocks.com, you can go to 1000xstocks.com and apply for access. Use our search feature, the compare feature I'm showing you right now. The earnings call feature, SEC filings, so you can type in a ticker symbol and pull up SEC filings, 10Ks, 10Qs real easily. Same thing with the conference calls. You can adjust the speed. We have definitions for all this stuff, so if you don't know what a lot of that stuff means, you're like, I don't know what that means. I have the definitions there, so it tells you exactly what that is, right? So very, very helpful overall, and we're working on some other features right now behind the scenes that should be very helpful to you guys as well. Wynn Resorts, I mean, this obviously is a stock that's gone through a brutal time for the past many years, Obviously, Rona was just devastating the company, sent the stock all the way under 50 back in that situation. But I'm looking at 83 here. Wynn's Las Vegas business is very good. Macau continues to come back stronger and stronger and stronger. And so I look at a Wynn Resorts and I'm like, that stock's incredibly attractive. Same thing with Buc-ee's. Now, Buc-ee's all of a sudden out of nowhere made a big move here today. Very big move. I mean, look at that. Straight up. What's going on with Bucks? There's something going on there. That's too big of a move. Oh, wow. 23 minutes ago, activist Elliott takes stake in Starbucks. Smart. I mean, they're going to make a lot of money on that. If they stay in long term, they're going to make a lot of money. So activists have been pushing the coffee giant privately on ways to boost its stock price. Interesting. Now, sometimes with those things like an Elliott, with a venture capital fund or a VC fund or a PE fund, anybody like that, right? Or just a fund in general, buying into a stock, sometimes that stuff's short-lived. So just a little food for thought in regards to that. But look at that. As soon as that news broke, straight up. You got to love it, man. If you're like Elliott, let's say, for instance, and you're an activist, and just by the announcement coming out, the stock goes from 74 to 79. I mean, talk about making easy money, huh? But anyway, Starbucks stock, even at 78, is very attractive, but it was more attractive an hour ago, right? I mean, if you had to pay 74 or 79, what would you rather pay? I'd rather pay 74. It's all the difference is an hour, right? Nike stock, obviously, this one is, I'm buying this stock pretty much every single week right now. Like basically every single week in the public account and in my private accounts, like I'm pretty much buying the stock on basically an every week basis. Patreon portfolio. It's just, 2024 is just a great opportunity for Nike stock, in my opinion, to just add shares, put them in the filing cabinet, and then come back and take a peek in 5 or 10 years. Obviously, I keep track of my companies all the time, but, that's one I feel very comfortable holding for the long term. It's not like I look at a Nike and I'm like, maybe it's a trade. Maybe I get out of it next year. Oh, give me a break. Like Nike could then go to 100 next year. I'm not selling Nike. Like Nike is one of the stocks I love having in my portfolio. I want to make it a big core position and then hold that baby. And then if it has dips in future years, take advantage of that. Buy it on and off for years to go in the future, right? But not really looking to sell, just to be quite frank. Uber stocks looks pretty decent. Shopify. So we look at Shopify here, right? We can go all the way back to where the stock was back in 21, $168, and today it's about $68, right? Absolutely incredible. Oh, no, excuse me, $63 here today, right? Absolutely an epic crash. Obviously, it's come a long way from those lows of 2022, where it's down to like $25. But, Shopify is just one of those businesses that just is a growth beast. We pull up expected growth rates here for Shopify. And what we find, forward P 64, 2-year out forward P 44. So rich, right? But look at the growth rates. Come on, man. Like for these sorts of growth rates expected here, is that really a high forward P or 2-year out forward P? No, it's not. Not when you're putting up this sort of growth. Now, Shopify's growth came to a standstill, right? I might feel differently. I might feel very differently about Shopify, but for now, it's very attractive. Shopify, oof, love that one. That's another one I love to make it a core position. Just keep adding, right? Zoom stock's extremely attractive right now. This stock, we all know, had an epic crash, right? One of the most epic crashes out there. But this stock, I actually just bought some shares recently for the first time in the stock, $559, and it's $50 here today, 50-something dollars, right? It lost 90% of its value from the peak. Incredible. But did the business model completely fall apart? No. It's actually got a great income statement. It's got a great balance sheet. It's got great products, right? And people love it. And it's a very sticky business model, actually. If we look at kind of EPS growth, pretty good EPS growth expected next year as well. Revenue growth, not the most exciting. It's, around for next year, they're expecting about 4%. Current year, about 4%. It's relatively sleepy in regards to that, but for this sort of PE, come on, man. It's too good of a company to be trading down there. That's a little insane. Monster's gotten a little bit interesting here recently. It's come down from that $60+ level. It was back in March, down to 50. And if there's continues to be weakness in either the market or the energy drink category, Monster will break that 50, go right back down to 45 or so. So that one's somewhat interesting. And then if we compare them to Celsius, Celsius has fallen off a cliff, right? Celsius has had a tremendous past 5 years, but in the past like 2 months specifically, it has fallen off a freaking cliff. And look at this baby just recently. Oh my gosh, off a mountaintop, right? Woo-wee. Yeah, it's fallen about 50% in the last roughly 2 months. That's incredible. Incredible fall for Celsius, but Celsius is looking, the thing with Celsius is they've got a lot of, I think, bad publicity recently, right? But that's what these companies have to deal with in the energy drink space. These drinks aren't healthy. Anybody that ever tries to pitch energy drinks as healthy, no. That's like pitching soda as healthy. Is soda healthy? No. Okay, no. Okay, beer's not healthy either. Drinking's not healthy. Everybody tries to pitch these things as healthy every once in a while, and I'm just like, no. Okay, none of this crap's healthy. Drink water. Drink water and call it a day. Okay, eat a flipping flapjack and multivitamin. But they're going through that sort of time period right now, and I do wonder if that's going to affect Celsius worse than it affected Monster, because Monster had to go through several different cycles in the past where essentially people were saying, and so I wonder if Celsius is going to be able to hit these numbers. That's the thing I'm worried about in regards to Celsius. If I was to start a position, they might not hit these numbers over this next year or two that analysts have, and so that wouldn't be good, right? So when it comes to Monster, no one ever looked at Monster as a healthy product, right? Monster, people always looked at it as it's an energy drink, it's going to get me jacked up. I like the taste of it. Boom, that's it. Celsius is a little different. Celsius, I think, has kind of tricked a lot of people into thinking it's a healthy product, right? And so when they're then attacked and people say, no, this isn't a healthy product, does it affect their business much more negatively than when Monster had to go through a lot of this in the past? Maybe it does. Maybe it does. I mean, I've even heard a lot of hospitals will give their doctors and nurses and stuff like Celsius products. And I just hear some of the stories and I'm like, really? Like, really? Really? They really think it's good? Do these people know what they're talking about? I don't know, man. So anyways, I don't know, but Celsius, it's one I'm keeping track of, but clearly there's a breakdown happening in that business model right now. You don't get a stock to drop 50% in 2 months without there being a real, like a breakdown in the business model. So something bad's going on there. We're just going to have to find out how bad, but that's really bad. That's what I'm going to say about that. Cake, I actually added some cake today in my Patreon portfolio. Love cake. Now, SoFi continues to be attractive. Obviously, it's not as attractive as it was just, a few days ago when it was $6, but still, it's $6, $7. If SoFi's going to where a lot of longs think it's going over the coming years, it doesn't really matter if you buy SoFi at 6 or at 7 or even at 8. If you really believe SoFi is a company that's going to be a $50 stock, $100 stock, or even a multi-$100 stock, if you really believe SoFi is going to grow into becoming a banking giant over the next 10, 20 years, honestly, it's all going to be a joke in the end. If you bought at 6, 7, 8, 9, 10, everybody's going to be like, it doesn't matter if you bought at 6 or 10. Like, people are going to be like, what? You got SoFi at that price back then? What? And they became a banking giant? What? So, a little food for thought in regards to that. Honest stocks all over the place, but this is actually, very attractive. Very attractive in regards to Honest. I can't wait for their next quarter. It's so funny because, if we went back a year ago, I was like, didn't want to even look at Honest's numbers, because the company had been so disappointing for quite a while under the previous management. And the new management came in and I was like scared to look at numbers. And so far the new management, everything's getting better and better and better. Margins are getting better for the company. So very happy as far as that. Fubo is about to go into a very exciting time for them. The stock obviously is in a pretty devastated place, although it's come back to life a little bit. If we go back to June, 112 to 144, it's a pretty big move up. But stock's been devastated this year, obviously. But SoFi's going in an interesting time for their business model because they're about to go into a time period, folks, where it's the kind of the ideal situation for their business model. So we just came off some big soccer events, right? That usually is a boost up for Fubo. But then we got the Olympics coming up. That should boost Fubo. And then right after that, we have football season coming, right? At the end of August, college football season starts. Pretty much always huge for Fubo. And then starting at the beginning of September, NFL starts. Also always big for Fubo. So We also have advertising money about to pour in, right? We know it's political season, and we know, there's going to be a lot of money to be spent. And keep in mind, whenever these people donate all this money, like you hear about this person's donating $45 million, or you hear about this person's, people got to understand where a lot of that money is going. A lot of money is going to be going to Google. A lot of money is going to Meta, right? Because a lot of that money ends up being spent on advertisements, on Facebook, on Instagram, right? It could be on Google search ads, and it could also be on YouTube ads as well, right? And YouTube TV, because YouTube TV is obviously a big giant. And then the smaller amounts of money get spent on services like Fubo, obviously, right? Because they have very, if you want to advertise to somebody who lives in a specific zip code, right, you might want to put an ad on a football game, right? And, because there's a certain amount of ad slots. Let's say it's it's an NFL game going on. There's a certain amount of ad slots that are basically ad slots that are going to be shown for everybody across the United States, right? But there's usually one or two commercials in there that could be more local related commercials. And that's when you can get those political ads, and that's where Fubo has an opportunity to make some good money there, right? And get their cut of the whole piece of the pie, right? So anyways, we'll see what happens with Fubo. Obviously, they also have the lawsuit situation going on with Disney and all those guys. So we'll see, what the outcome is there. I really think there's only potential upside, but everybody's also concerned about how much they spend on that lawsuit. We'll get some clarity on that in this quarter they're about to report. If it's not that big of a number, then it's, pretty good. Chipotle, CMG, this is great news for my hedge in regards to this. The fact that stock's not doing much today. A lot of people, even Mav last night was talking about, Chipotle, big rebound coming in Chipotle. No, it's up 0.1%. You would have thought Chipotle would have like you would have thought Chipotle would have like an up 3, 4, 5% day to day, because the stock's been so devastated recently. The fact that it's that weak sauce of a move, 0.1%, very good. That's very good overall. Commodities. As far as commodities go, this is great. This is great. We can't ask for better. As far as commodities go, that's putting inflation night. That's great. WTI 79. I'm recording this when? July 19th. We're in the middle of summer. Crude oil 79. You couldn't ask for a better situation if you want to talk about getting inflation numbers down. This is best case scenario. Wow. That is best case scenario. What's going on here in regards to the indexes here today? Dow's down about 400. Looks like Russell's down about 0.5% there. Bitcoin's having a good day. Bitcoin and crypto are rolling here in the short term, and the reason being is if you listen to commentary coming out of T-Man, coming out of his VP, it sounds very promising for crypto. But we'll see. There's always a lot of talk and those sorts of things. We'll see what happens there, but it looks pretty good. NASDAQ down here a bit today, but yeah, as far as some of my bigger positions, ELF's a bigger position for me. That one's doing well today. Palantir's a bigger position for me, kind of flattish. Meta's a big position for me, kind of flattish. Tesla's a big position for me. That one's doing very bad. So, kind of a little bit of mixed bag out there, huh? Alrighty, let's react to this CrowdStrike situation, because this is crazy.
This morning with a very special guest. Hey, Jim.
Thank you, Carl. Yes, we have to speak right now to George Kurtz, the CEO of CrowdStrike, a company that has a stellar reputation, but we want to know what this would do to it. George, thank you so much for coming on Squawk on the Street.
Thank you, Jim. Thanks for having me.
What happened at CrowdStrike stock? My guess is down 10%. That's my guess. CrowdStrike. Oh, a little worse, about 11.5% or so for CrowdStrike here today. So, but it was way worse earlier. It got all the way down to about 290. Interesting. Yeah, definitely bad publicity for them today. It was no bueno, right?
All right, George, I know your company very well. Our viewers know it too. How did this happen?
Well, first, Jim, let me start with, I want to personally apologize to every organization, every group, and every person who's been impacted by this. And we understand the gravity of the situation. And let me explain a little bit more about what happened. This was not a code update. This was actually an update of content. And what that means is there's a single file that drives some additional logic on how we look for bad actors. And this logic was pushed out and caused an issue only in the Microsoft environment, specific to this bug that we had. We identified this very quickly and rolled back this particular content file. Obviously, many organizations are impacted, and many of them are beginning to recover. Many systems can be rebooted, and we've fixed the issue, so the systems are coming up and running. Some systems may not fully recover, and we're working individually with each and every customer to make sure that we can get them up and running and operational. But to be clear, it was not a cyber attack. It wasn't anything related to that. It was a content bug or update that we sent out, that we identified, and we rolled back.
Why do you...
So first off, that's good news in regards to it not being an actual cyber attack. But on the flip side, it also makes them look pretty sloppy. They're like, oh, you push some sort of update, you push something out, and it caused all this problem. And so it almost caused like a fear of like, what if they push something again in the future and we have another one of these situations?
Many different users find themselves with the blue circle of death. And how do IT people get in touch with who is down? Because will this take, are we talking hours? Are we talking days?
Well, many of the systems are quickly coming online because they're able to be rebooted, and the problem goes away and is fixed. Some systems are going to take some more time. It could be hours, it could be a bit longer, but we're working with customers that if the system doesn't fully recover, we're working with them on the specific fix for that. So essentially we are providing guidance through our tech support, through our blogs. Everything that we know, we want to be as transparent as we can and get that out to our customers.
George, this is CrowdStrike we're talking about. Is this Falcon, which is your best program? And I need to know, why did you not phase this in? Why was this done all at once? That seems to be, to me, irresponsible.
Well, it traditionally goes out in a phased approach, and it goes through, what we do is, we've been doing this a long time, testing throughout the life cycle of any of these updates. So it initially went out and we started to see some issues and then pulled it back. So not all of our customers are impacted. Windows and Linux are not impacted. And as soon as we saw this issue, which didn't manifest itself before we obviously sent it out, we rolled it back. And now we're dealing with the impacted systems.
I want to be sure about this. This did or
Yeah, it sounded like he kind of avoided the whole why send it all out at once deal.
not get to Azure, which is Microsoft's cloud. Because if it did, then maybe that would explain things, but maybe they're separate.
Well, Azure can run, customers run in Azure, right? And they can run our software there. So if there was a customer that was running in Azure that had our software, it could have been impacted. But that's the extent of what I know specific to the Microsoft piece.
You do not know whether this has impacted Azure or not?
Well, when you say Azure, it has impacted customers that are running in Azure. That's what I know.
All right. Now, let's talk about liability. You offered an apology. To me, an apology means that therefore you are culpable and therefore you will be sued. Maybe perhaps sued by airlines, perhaps sued by networks, perhaps sued by banks. Let's talk about the liability to CrowdStrike and what it could mean.
Well, we have to sort out what that all looks like, Jim. Obviously, from our perspective, and I wanted to jump on the air because it's all about our response and getting our customers back up and running. We'll do the hot wash on how this happened and ensure it doesn't happen again. I think past that, we'll deal with. My goal right now and my mission is to make sure that every customer is back up and running and providing the protection that they've come to rely on from CrowdStrike.
Do I believe that if the ones that...
So that's tricky. So in regards to if they have to face lawsuits, right, from, let's say, airlines, as Jim's speaks about there. Okay, they could go that route, right, and try to sue CrowdStrike for damages of whatever happened here today, right? But the issue is you will end up paying for that again, likely, right? The CrowdStrike will likely end up going up on price. And guess what? Anybody that competes with CrowdStrike also is going to look at this. And if there were lawsuits open, they're all going to go up on price significantly, because then you got to factor in, the danger of like, if something goes wrong and it's our fault, they're going to try to hold us responsible for this situation, right? Which then ends up price boop, 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 is going to go up, and you're going to end up paying for it. There's no such thing as a free lunch. I tell you guys that all the time. There's no such thing as a free lunch. And the customers will end up all paying for that on the end. And so if you're the airlines and you're like, we want to get these guys, for what happened, and they caused a bunch of problems in our system. Okay, go ahead, do that. You're going to pay for it over the next 20, 30 years. And like I said, if you think, okay, if CrowdStrike raises our price a bunch, we'll go somewhere else. You think they're not going to? Understanding that you're going to go after them if something goes wrong, of course they're going to go up in their price. It's going to be like a big insurance policy that at that point in time, right? So, you got to be careful with that stuff. That's all I'm going to say, because that, might sound good at first, and then you kind of play down the game a little bit and you realize, oh crap, this is not going to go well. And they'll end up paying for it in the end in a big way. And when I say them, I'm not talking about CrowdStrike. I'm talking about the companies.
Not come online.
Because all those companies, they need cybersecurity. It's not like that's something you can just be like, we'll have it or we'll not have it. No, you choose not to have it, you're going to end up in a lot more problems.
Perhaps have to be hand fixed, which would stretch every single IT department of everybody who is a client who you sent this update to.
Yeah, well, we're working on the automation. There's many times this can be automated to be fixed. It may take more automation than just simply rebooting the system. That's what the teams are working on right now with customers. But we've been in contact with. Go ahead.
I'm sorry.
Obviously been in contact with customers working through the fixes, and many of them again are coming back online.
I'd like to turn this over to my colleagues, David and Carl. Maybe you want to ask George something?
Yeah, Jim, thank you. And George, thanks for being here. Yeah, I mean, to Jim's point, I think right here, I know on the ground here at the New York Stock Exchange, our CNBC computers are going to require somebody apparently to come and actually do some sort of an update manually. So,
oh my gosh, did you see that stock price? It went from under $100 to almost 400 in a year and a half. Flip my flapjacks.
Again, this could take some time, couldn't it, for organizations that are going to require somebody to actually manually update code or whatever it may be to be able to successfully reboot.
Yeah, there could be some manual steps involved, and certainly we're looking at ways to be able to automate those manual steps. And depending on the system and the computer brand and the network and how it actually works, it's different in each organization. Many systems can be rebooted, and the fix can be done automatically upon a reboot that's specific to the hardware manufacturer. So we have to work through that, but there is a manual fix for it that can be employed. And again, we're looking at ways to automate those sort of fixes so that it isn't as manual as going
understood. You mentioned obviously some updated content, the issue with the Microsoft environment solely, but to what extent is Microsoft, or in the past, have they perhaps been able to identify something that might cause a problem? I'm just curious to understand if there's any culpability here in terms of Microsoft as a result of what's occurred.
Yeah, we're trying to sort it out on our end, again, exactly the interactions. And as you might imagine, the operating system, and this is what we're talking about, Microsoft operating system, is robust and complex. And if you have a negative interaction based upon our content update.
I bet you any money in the terms of service also that every client signs off on, there's some sort of, you can't hold us accountable if the system goes down or something. I guarantee you in the terms of service, like that's almost like, I would say 99.9% probability that's in those terms of service that every customer that signs up for CrowdStrike has something like that in there. So that's also a jail-free card in regards to CrowdStrike. And once again, if the customers want to try to go after them, I'm just saying like that's crazy talk, because you're going to end up paying for way more in the future than if you didn't.
That caused the issue, right? Or can cause the issue. So we've got to do a hot wash and figure out exactly what systems were affected. Was it a particular operating system version or a patch level on a particular system? We don't have all the details on that yet, but that's what we're going through right now.
Yeah, you know what else is interesting is we were speaking about Black Swan events. I think it was on the main channel a few days ago or something like that, right? And talking about Black Swan events. Oh, and we were talking about what happened with T-Man, right? I think it was the first video I produced since the whole T-Man incident, right? And I was talking about, man, what a Black Swan event that would have been if the connection happened, right? And those are things you have to be prepared for in the market. And I think the next major Black Swan event that's going to happen someday, I don't know when it's going to happen, there's going to be some sort of major cyber attack or something that's going to happen, right? And it's going to shut down systems for days, weeks, maybe even a month, and it's going to cripple the economy in the short term. It's going to cripple countries in the short term and cities and whatnot. It's going to cause an absolute mess. I can definitely see that happening someday. And so that will be probably the next thing. But when does that happen? I don't know. I don't know when that happens. Maybe it's 2027. Maybe it's 2032. I don't know. But I could see something like that happening one day and just a shock and awe type event. Very similar to, obviously, Rona, right?
Which is affecting folks across the world right now. It just happened after CrowdStrike rolled out an update last night. Dan Ives just put out a note on CrowdStrike on how they're going to need to go into damage control mode and what comes next. Dan, thank you for joining us. What does come next, and what is this going to cost the company?
Well, there's a black eye moment for CrowdStrike, and I'd say for the cybersecurity sector. Now, the damage, look, it's going to be weeks, months, potentially years in terms of understanding the damage. The big issue is the brand damage, because CrowdStrike today becomes a household name, but not in a good way. George and the team, I don't think this changes the long-term story, but other competitors, Palo Alto and others across, they will try to take advantage of this. That will be a big focus in the sector.
Let's see where Palo Alto is trading at here. And also, I also wonder if Palo Alto's stock is up today or not on the back of this. The ticker symbol PANW. Let's see here. PANW. Palo Alto Networks is, I think, also down here today, right? No, maybe not so much. It's up 2.2%. So it does seem like they're like benefiting a little bit from this. And then on a 5-year, man. That's a really nice 5-year chart. Oh my gosh, that's a nice 5-year chart for Palo Alto Networks, 346%. And look at it, it's just a beauty. Wow. As far as valuation goes, this is interesting. Forward P 60 versus CrowdStrike 80. 2-year out forward P 48 versus 61, right? Palo Alto Networks has, well, obviously CrowdStrike's just kind of flipping over, so we can't really compare that. If we want to compare revenues, 20% versus 34%, 15 versus 35, 15 versus 25. So clearly CrowdStrike is expected to be the much stronger growth one, but you got to wonder, does today so negatively affect the company that Palo Alto outgrows them in the future, right? And then CrowdStrike's got to bring up their net margins substantially because the gross margins are in line with Palo Alto, but the net margins, look at how, which means CrowdStrike's just a much earlier days company in kind of their growth cycle and kind of where that business is at. Palo Alto is much more mature.
Do you think that there is a liability issue here? Meaning if you're an airline, like an American airline or whoever, where there's a ground stoppage and they're losing money as those planes are sitting on the tarmac, can they go ahead and sue CrowdStrike?
If you're a lawyer for CrowdStrike, I don't think you're going to be seeing the beach this summer, because this is going to be coming from probably all angles, right? Legally, not just airports, transportation companies. Now, look, Microsoft needs to figure it out from their angle. Now, they're more, I'd say a victim here relative to what happened on the Windows side. So I think less of an issue for Microsoft. Look, for CrowdStrike, you're talking about a company that prides itself on brand. F1, globally, anyone that's seen them at airports. And this is just, look, it's an epic disaster. It's something we've really never seen in the cybersecurity industry at this scale. So this is a bit unprecedented.
In terms of the way we were talking more broadly about what happens next and the sort of larger implications of our reliance on the cloud. Do you think this changes anything about the way systems are set up more broadly, about the third parties that are used by a Microsoft, about even the idea of consolidation in these spaces?
Yeah, Andrew, after this happens, I mean, changes will have to happen because the scale of something like this, there will be changes in terms of third-party implementation updates, not just for CrowdStrike, but across the industry, because this is unprecedented. And it's not just black eye for CrowdStrike, black eye for the cybersecurity industry.
When you say changes, self-regulated changes, or do you think the government gets involved?
I think it will be self-regulated, but the chances that CrowdStrike gets called to the Beltway for some hearing, it's probably pretty high.
Yeah, Dan, when you say changes that happen, you mean Microsoft and other companies aren't going to let third parties come in, third-party vendors, and do cybersecurity for them, that they will do more of this in-house?
Well, I think they're going to have to change in terms of the process on the updates. And then just take a step back. Google likely, probably acquires Wiz. And probably one of the biggest cybersecurity acquisitions is reported by the Wall Street Journal. I think this is just going to push Microsoft further and further to potentially trying to do a cybersecurity acquisition themselves. I mean, they've been around the sort of edges there.
They buy CrowdStrike.
But this is something within Redmond, they don't just, go next week like nothing ever happened.
But that meaning that, how do things happen now? Was this a third-party vendor that was allowed to do the update? They sent it internally and it happened, and nobody at Microsoft realized that there was this problem or bug in it, and you think that has to be then happening internally, which is why they would want to purchase one of these companies? And if so, who do they purchase?
I think on the Microsoft side, look, third-party updates are common. That's happening on a minute-to-minute basis. In terms of Microsoft, we've talked about they're going to have to look across the industry. Cybersecurity has been something that, normally they have third parties, and they will continue to have third parties, Palo Alto, Zscaler, and others. But I do believe when something like this happens, you look at names like a Varonis, a Tenable.
Right.
So I definitely wouldn't look to buy these stocks right now, any of these cybersecurity companies, just to be quite frank, including Palo Alto. But what I'll say is this could cause a lot of fear around that entire space and cause valuations to come down substantially. And if you were to see those valuations come down substantially, I think that could set up as potentially a buying opportunity maybe in the fourth quarter of this year, maybe into 2025 for a lot of the cybersecurity companies, where everybody would be fearful of like, oh, they push one bad update and they cause all these problems. Oh man, this is a huge situation, right? But I do believe if companies try to hold them liable, I do believe they're going to go up on price substantially over the coming years, and all their competitors will as well, because they understand the risk that goes in with that. And then, those companies are going to have huge pricing power because there's only a few of them that are really like big dogs in that space, right? All right, guys, appreciate you joining me as always. Much love. If you're looking to access 1000xstocks.com, get access to my software that I use each and every day, then you can go ahead and apply. Go to 1000xstocks.com. I might also put it as a pinned comment down there. Much love and have a great day.